Hi, everybody. I'm David Bank. I'm editor and founder of Impact Alpha. It's, as always, great to see so many agents of impact on the call and so many advisors. And that's really the point of this call, and we'll get to that in a minute. I think folks who've been on these calls before know that now is the time to start introducing yourself on the chat thread and maybe say where you're coming in from, geographically. But I also have a request, which is if you've come in through one of our partners, and we'll meet some of them on the call, let us know which one. And if you've come in through Impact Alpha, maybe let us know what you'd like to see more of or in Impact Alpha, particularly around this Advisors Corner, which we've launched with CapShift. And so let's jump in and introduce our guest, and starting with CapShift's Liz Sessler. Hi, Liz. Welcome.
Great to see everybody, and thanks for having us, David and Zulema. This partnership between Impact Alpha and CapShift has been a long time coming, but just for context, CapShift is really a service provider for financial advisors and donor-advised funds, along with families who are looking to bring impact onto their platform. And part of what we do is exactly what we partner with Impact Alpha every day to do, which is like tell the story of impact investing. How do you get started? What might be some of those early steps you could take in your own practice in order to engage clients? And we see that this is a real kind of client delight and client retention strategy, particularly around certain demographics. But I'll hand it back to you, David.
Terrific, Liz. And people can see the Advisors Corner on Impact Alpha. And Liz had a byline and a story just the other day, and I think you've had a number of them, so we really appreciate that. And from Impact PHL, Cory Donovan, I think coming in from PHL. Welcome, Cory.
Yeah. Hi. Good afternoon, all. Calling from Philadelphia. We are Impact PHL is a next year will be 10-year-old. I describe us as an impact investing or values-aligned investing advocacy organization here in the Philadelphia region. We want to engage the region's wealth about how and where their money is invested and get them on their journey to aligning their investments with their values. So when I learned about this partnership between Impact Alpha and CapShift, I was like, let's get the word out there.
Yeah, terrific, terrific. And we've been a longtime partner and speaker and moderator and whatnot with Impact PHL. So it's great to have you. And Westfuller's Randall or Randy Strickland. Welcome, Randy.
Hi, how are you? Thanks for having me here. I'm calling in from New York City, Westfuller. We are a impact investment advisor, primarily for foundations, endowments, and high net worth that are looking to align their values with their investments. Most of our clients are focused on specific themes, social justice, gender equity, climate solutions, as well as other approximate themes to that. So good to be
Terrific.
here. Thanks.
And we've been working and seeing you all around, Randy, for many years. And Westfuller seems to be popping up all over the place. So very, very happy to have you here. And then finally, but not least, of course, Julia Fish from Glenmede. Hi, Julia. Welcome.
Hi, David. Thank you so much for having me. And it's great to see so many friends in the chat. Thank you so much for making time. I'm a managing director on the sustainable investing team at Glenmede. Glenmede is a wealth and investment management firm, originally established to manage the funds of the Pew Charitable Trust. We've gone on to manage assets for over 1,800 private wealth individuals, family offices, endowments, foundations, and institutional investors. So a wide range of motivations and profiles. We're typically working with private wealth individuals with 5 million in assets or more, and we're typically working with foundations with at least 10 million, with our average endowment and foundation size being closer to 50 million. So I'm really looking forward to being here today.
Terrific, terrific. Cory, just help us sort of set the stage. Advisors are kind of the glue in some sense, helping clients find and sort of manage and their investing broadly, and then now including impact investing. Sometimes folks are saying there can be the obstacle as well, and not necessarily helping clients move in that direction. So just how do you kind of see in the Philly ecosystem that you described the importance of advisors?
Yeah, well, I usually tell people that the advisors are the front door to this conversation. They already have the relationships, they already have the trust, they're already managing the money. But one of the things we learned in the early days of Impact PHL, and we'll be 10 years old next year, but for the first 2 years, we had hundreds of conversations, high net worth individuals, family offices, foundations, and lots of people in the financial sector. And what became clear to me was that most most asset owners had not talked to their financial advisors about their values. They'd never been asked about it. When I show people, and almost on a daily basis, I'm using the investor values tool from As You Sow to show them where their money is invested. First of all, finding out what issues they care about, and then showing them that their money's misaligned. And so I think a big reason why we exist is exactly that issue you're highlighting, that this conversation hasn't happened. And again, here in Philadelphia and the people we're engaging, mostly they're discovering that their money is misaligned with their values. And our first call to action is to send them back to the front door to talk to their financial advisors about their values and make sure that their money is aligned with their values in whatever way they see fit. And that's not our job. That's Randall's job. That's Julia's job. That's a lot of people on this call's job to do that. I think there are various reasons for that. Maybe we can get into that, and maybe there'll be some questions about that as well. But that's our first call to action. And then again, we can circle back to this later, but our second call to action is to add local as a lens, right? To say you live here, your kids go to school here, you volunteer locally, you donate to your community. Where's your money invested? Because I think every community in America, you know, um, has money invested in other parts of the world and other parts of the country, and then every community looks around for that community capital to build affordable housing, invest in social enterprises, and do other things in their own community. But that plumbing is less well built, I'll say. And so, I think that's a latent, self-evident desire. I think most people like the idea of investing locally. It's just not, to borrow Clara Miller from the Heron Foundation's terminology, that plumbing isn't built. And so we're hoping to help build that plumbing here in Philadelphia, and we're hoping that other communities build that plumbing.
Well, and there's a really interesting sort of use case here, and there's something like a dozen foundations in the Philadelphia area, and we wrote a story up on this about how they, and I think with some of your facilitation, had started to move towards impact investing. But one of the aspects of that was many of them changed their advisors in order to do so.
Right. I think as this conversation matriculates and peers talk to peers, I like to say that I think 10 years ago, if you were a foundation here in Philly and you were doing this, people would probably raise an eyebrow and ask you if that was a good idea. And I'm hoping that in another 10 years, if you're not doing this, people will look at you with why not? What's wrong? We've tracked, and as ImpactAlpha wrote, more than 12 foundations here within the last, I'll call it 3 or 4 years, have changed advisors because they realized that in order to align their assets with their values, they need some additional help. I think all of those foundations have also added local as a lens. So they're telling the financial industry, we want you to help us find local investment opportunities and create local impact. Firms like Westfuller and Glenmede have benefited from that. And I think for those who aren't engaging their clients around their values, there's risk to that. And I have a little story I can share later about how that might not be as visible as you might think.
Okay, well, we'll look forward to that story. But let's bring in Randy as an advisor, and Cory just sort of laid out essentially a business opportunity for advisors who are able to engage their clients around values and also around the opportunities in this whole impact space. And just maybe let us know what you're seeing essentially in client demand and the kind of client conversations in the context of helping other advisors see how they might engage their clients.
Absolutely. We have a lot of conversations with advisors that are trying to who see trends, and there are some documented trends. US SIF, for example, has publishes a study on growth in assets in the impact ESG space. I think they said about 6.6 trillion as of the beginning of this year. That's just listed equities, and there's been consistent growth. And then, of course,
And
there
just to pause on that, and that's
yeah,
despite all the pushback and
yep.
blowback and backlash against ESG, the assets are still growing. That people don't realize that. They think it might have gone away.
No, yeah, it certainly didn't go away at all. And of course, and I think everyone knows about this wealth transfer that's occurring, has been occurring, and will be occurring. And what is that number? Somewhere around 125 trillion through 2048. And we also know that that next generation is more purpose-driven, does want to align their values with their investments, everything that Cory had already previewed. And then there's foundations that are realizing that their funds are out of step with their mission, and so are seeking to align. So there's all of these trends that are occurring. So we are benefiting, quite frankly, from that. And I think the problem for some advisors is they just don't feel that they have a voice. They don't feel that they can have these sort of discussions. And I know later we'll talk about and give some resources where people can get up to speed so that they can be articulate in these concepts. And this whole space is a little crazy. We've got it's a word salad: SRI, ESG, green investing, impact, sustainable. They all mean roughly the same thing, different methodologies, but this word salad of names and approaches to aligning one's values with their investments can be confusing. And we're also in this space somewhat responsible for that. You can get three impact investors in a room and get five different definitions of what it means. Generally speaking, it is about getting outcomes that are beneficial to people and planet, as well as getting financial returns. I know we're also going to talk a little bit about the later about the misperceptions about that.
Well,
So I don't want to steal anybody's thunder, but those are
right.
we're seeing great demand, and it
Well,
hasn't waned at all. I'm sorry.
let
Go
me
ahead.
let me let me just underline you mentioned the great wealth transfer, which is ongoing. But one of the things I think it both strikes fear into the hearts of some advisors and maybe whets the appetite of others is that many times the next gen, as they come into the money, sometimes it's the widow if the wife or is living longer. But when the wealth transfers, one of the first things folks do in a large number of cases is change their advisors.
Indeed.
So that's a threat to some existing accounts, but it's an opportunity for others to pick up accounts. Are you seeing that in practice?
Absolutely. And we have friends at some of the larger wirehouses as well. And if you've seen that they have implemented sustainable investment departments that are seeking to educate their financial advisors so that they can then have these discussions. They're also doing another barrier to entry is sometimes having the appropriate product on your platform and knowing exactly how to pick those. I don't want to get into some terms, greenwashing, woke washing. These are terms we throw around where you have funds or strategies that claim to be ESG friendly, impact friendly, and in fact are not doing so. So being able to decipher which ones are most impactful is another thing that some of the large wirehouses are doing a good job. And then the infrastructure also for advisors. And so you're seeing platforms, custodians as well, making sure that they have the various strategies by asset class able for advisors to access for their clients. But it's a whole approach, a holistic approach, so that advisors can both have these conversations when they're approached by whether it's the next gen, whether it's the current gen. And a lot of smart investors are seeing that the way to get their children, grandchildren involved in these discussions is to have conversations about sustainable investing. That is a lot more interesting sometimes than just talking about the large cap growth strategy. If you're talking about something that addresses climate change, just something that addresses inequality, land ownership, and addressing all of these issues that are important to people, that gets that next generation involved in the conversation and more interested in the family assets.
Terrific, terrific. And actually, I just want to stay on that sort of topic with Julia. Take yourself off mute for a second. First, two pieces. One, we advertise this as folks get to ask, and particularly advisors themselves get to ask the kind of tough questions. So I want to encourage folks to start populating. There's a Q&A feature you'll see at the bottom of your screen there. You can do it in the chat, but it's a little harder for me to keep track of. If you do it in the Q&A, we'll weave the questions into the conversation. And then the second thing, Julie, I just want you to maybe help us get some nomenclature out here. We talk about advisors, but it ranges all the way from your I want you to help understand what is an advisor. People hear phrases like RIAs and broker dealers and all these kinds of things, and I don't understand always all the time of what role the advisor is playing with that client and how much, just to put it bluntly, how much control over those investments they have. So maybe just lay the landscape of the advisors, and then I do want to get back into this family dynamics question with you.
Yeah, absolutely. So I think that the answer is it depends. Advisor can be defined in a variety of ways, which is also absolutely confusing, of course, to investors as they're navigating the space. I think that some RIAs will provide access to wealth planning, wealth advisory. Perhaps they do some kind of stock picking. Others will have more of a model approach and less customization, but it really depends.
And RIA, just for folks who don't get the acronym, Registered Investment Advisor.
Exactly. Exactly. Yes. At Glenmede, I think how we think of ourselves, and just because of the minimum the minimum client size we work with for individuals and organizations, we think of ourselves as offering white glove service to a variety of ranges of wealth, but making you feel like you have your own family office in the sense that you get access to wealth advisory, wealth planning, scenario analysis, right? For if we are to see a recession in the next few years, right? We're overdue for that given how the market cycle has been. Thinking about planning for liquidity events like a child going to college. And I guess having access to a robust planning engine is really critical. And I would argue that not every advisor has the same level of access to the same level of robust planning and scenario analysis. And within that conversation, of course, sustainable investing plays a very large role for the individuals and organizations I work with. And so I'm happy to get into that, but want to just answer your question.
Well, good. So let's jump in, because one of the, we've talked about the family dynamics, we've talked about the generational wealth transfer, we've talked about the value of engaging your clients in these values kind of conversations can deepen the relationship. But folks are going to be all over this spectrum, I imagine, and some folks are going to say, hey, I really want to lean into these causes I care about. Other folks are going to say, yeah, but I want to make sure that I protect my principal and my returns as well. So how do you just have that conversation with clients? I guess particularly families, foundations may be a different case, but particularly with the families.
Yeah, absolutely. So when Randy was speaking, so much of what Randy was saying, I resonated with. One of the stats that always stands out to me is in a recent survey, there was a note that 70% of heirs, so inheritors, switch advisors. And that can be for a variety of reasons. You might just want to do something different than your parents. You might have felt that you weren't receiving one-on-one attention from your current wealth advisor, right? That everything was kind of being tailored to the first generation and not to yourself. Or you may not have access to the values aligned investing opportunities, sustainable investing opportunities that you want. So I think for advisors, whatever kind of level of the life cycle or kind of sophistications that you're working at, it's really important to feel comfortable approaching this topic, David, with a language that feels really comfortable to you. So I always think of the Funfire article, no politics at dinner. Many advisors are not talking ESG, and we really see this was a 2023 article. I think
That was
it's
a
only brought in.
Thanksgiving. That's always the Thanksgiving tip, right?
Oh, yes. Well, it's always fun for me, right? Because that's the work that I do. So you never know with your audience. But I think what we found a lot of success with is really thinking through language, that instead of focusing on ESG or sustainable or whatever words might trigger a certain response or create conflict within multi-generational families, thinking about the specific themes that folks may care about. So let's say you're working with a family that's quite conservative, perhaps they're based in West Virginia, they may care about wildlife conservation because they like to hunt on the weekends, whatever it is. And just being really intentional and strategic, saying, let's talk about how you think about your passions and your legacy and your purpose. And I think there's a few pointers for that. You could look at someone's charitable donation history and say, there's other ways to perhaps amplify some of the themes and the trends we see in your philanthropic giving through your portfolio. What I really love about Glenmede's approach is that we work to meet people where they are. I work with individuals who may be allocating 10% of their portfolio to sustainable investing, and others are allocating up to 100%. Most are on a journey, right? Approaching higher and higher levels of allocations, but entering in eyes wide open that you may have a next gen who can't wait to be 100% impact aligned, but they may be working from a really constrictive trust. And you need to be able to work around that.
And then I guess that's a good lead into the foundation case, because foundations also sort of span the spectrum of having a kind of a sleeve, or sometimes people talk about PRIs, to have another acronym, but program related investments, and then the actual endowment investments. And so the foundations are on a spectrum. Some of them are on a path, as you say, to 100%. Just give us a sense of sort of how you play across all of those different choices.
Yes. So again, we can meet the foundation where they are. I've worked with foundations that say we're not interested in achieving 100% mission alignment, but we want to have very targeted, strategic, actively managed strategies that compose, let's say, 20% of our portfolio, right? So really using that impact budget, if you will, where to them it matters most, and actively managed strategies. However, especially in the Philly scene, as Cory well knows, we really seen a movement to foundations really intentionally saying, we want to be 100% mission aligned, and we want to be really intentional with our place-based investing approach. So, Glenmede, like other wealth managers and outsourced chief investment officers, or OCIO, we can't be everything to everyone. And so we've thought a lot about what can we build internally and what can we kind of outsource to other experts who are doing it so well, which is why Glenmede actually has a formal partnership with CapShift. Hello, Liz and team. I see Jordana on the call as well. And CapShift's been a really incredible partner for us in helping to implement place-based investing within these portfolios, whether they're focused on Philadelphia or Minnesota or LA or whatever it might be. So I do think there's a moment of leadership right now happening amongst several foundations saying, there's retrenchment in federal funding. We need to cover these gaps in social welfare and climate conservation. So how do we do that? Stepping up and perhaps our spending rate, or thinking more intentionally about full mission alignment.
Terrific, terrific. Well, I do want to ask, and there's a question here about sort of client journey and talking to clients. I think that's going to become a major theme here. But Liz, let's bring you in, because Julia did in terms of CapShift, and you're both an advisor and you also work with other advisors. So you have a good sense of the sort of advisor ecosystem, and you helped, sort of be the impetus for this call that there's a sort of need for advisors to be able to come up to speed and have credibility on impact. So just sort of, what are you seeing in the advisor, business actually?
Yeah, I think first and foremost, we see a lot of questions about how to best serve their clients. And because you've heard kind of the range of diversity across clients, there are lots of different answers to those questions. And so we spend a lot of time helping people get that first step. Like if you think about one of the families or the foundations that Julia's talking about who already have a bit of a theory of change, it's easy to take a first step at a place like Glenmede. We have lots of firms that we talk to every day and work with who maybe don't have a team of people focused on impact investing or a resource to start with. So even understanding kind of the landscape, and I think about that of moving from the SRI ESG products that you might find in the public markets to where we see really the most client demand, which is really around private investments. And you see this kind of overarching trend in the investment space where more and more clients at more and more retail looking levels are looking to integrate private investments. And then, of course, our more sophisticated clients already had nice allocations there, but they can do so much more from an impact perspective in the private markets. And so that tends to be the place where CapShift ends up spending a lot of time. Is then for an advisor, you have to ask the question, how do I find the right product? CapShift has a database that looks at a little bit over 1,500 that we've qualified impact investments in the private markets. And that's just so robust if your full-time job is not to go through those. And so we spend time.
Again, I know we're moving quickly through it, but when you say products, what you mean is investment opportunities, which means what?
So investment opportunities, and that can range from direct investments into individual companies, real assets, private equity, private credit. And we take that as far as recoverable grants. So really looking at these grant dollars that can go out the door, but have some opportunity to be recovered in unique circumstances. And that's kind of the range of product that we see. But of course, every platform, just like Randy mentioned, has certain restrictions around what they'll bring onto their platform. And so we try to help firms kind of figure out, A, what's the right product mix to have for your client base. And that's going to vary depending on if you're a place like Glenmede or if you're a more retail oriented shop, and then it starts to get into what are your clients interested in. And I think we've heard a little bit of this theme of that's a conversation that really deepens relationships. And it doesn't have to be what kind of impact do you want to have? It's really more about what are your values? What does your legacy look like? And those are questions that whenever we're trying to build relationships, whether they're with clients or friends, are really good deepening questions. And I think about this kind of next gen theme that we've picked up on and how far it would go to kind of deepen a relationship with a next gen family member who maybe doesn't have the authority to make allocation decisions, to at least understand what they value so that when you come into a quarterly family meeting, you can speak to something that says, I see you, even if you can't act on it today. That kind of validation is what starts to build trust in relationship. And I think for many of those next gens, part of why they leave are some of these things that Julia was talking about, right? They haven't previously felt seen, they want to change. And investing in that relationship early. We also see a lot of our clients do that in the philanthropy side of things as an early place for people to get started, ask them about making grants, using donor advised funds to give people kind of a place to make independent allocation decisions. So I think there are lots of ways that impact investing in particular can serve as this kind of anchor point for strengthening relationships with clients, but also growing the potential and power of what's possible when you work hand in hand with your advisor and think more expansively about your portfolio.
Great, great. I do want, everybody seems to want to come back to this family dynamics thing. I just want to sort of put some markers down on a couple things that you talked about. So products, and you did a good job explaining the range of them. But the question sometimes comes up is like, oh, there's just not enough to invest in, or there's not enough to invest in that meets my risk return expectations, or they might be there, but they're hard to access because of high minimums or all these different obstacles that get put in place. So how can an advisor actually make sense of this kind of chaotic environment to be able to offer something, sort of simple and credible to their clients?
So I think first and foremost, if an advisory platform can come in and clearly articulate what are their guardrails, that makes boiling the universe of potential impact investment opportunities much easier. The second thing is I would say don't feel, and every firm knows this, that every product has to be appropriate for every client, right? I think it is okay to have a set of products that are appropriate for your largest clients who are potentially your most active impact investors, and to have a smaller cohort of products that are available for kind of the full platform. But what's really important is what your financial criteria are to come onto the platform. And then enough about what your clients are interested in that you can narrow those impact themes, right? We don't want to overload you with things that are addressing climate change if your cohort of clients are far more interested in community and economic development. And the likelihood that your clients are going to use those exact words, right? Those are insider baseball terms, is very low. And I think that's where partners, whether that be in-house kind of impact investing expertise, going to a conference, working with somebody like CapShift, can help translate some of those things so that we can narrow the universe. I do think tools like our research engine are kind of a great place to get started and see, hey, what's that qualified universe? ImpactAlpha is a great resource, right? You guys are constantly putting out product for people to understand, hey, what's out in the market? Where are some of the leading investors investing? So tapping into some of these third-party resources, I think are going to start giving you the universe. But one of the things we will work with a firm on is building effectively their private impact investment buy list and say, hey, these are the 5 products you're going to help really educate your advisor base on, so that it isn't a universe of 1,500 investments or even 100, right? That's just too many for anyone to think about when you're building a number of portfolios. You can work with a larger number if your focus is 1 or 2 clients for kind of the breadth of your practice.
Okay, that's another good point, and I think the theme here is if you are an advisor or an advisory firm, how you feel some client demand, how do you actually get into this? And you mentioned kind of advisor education, which we've heard is sort of a gap. Like there may be a high level, sometimes business decision or something, but you've got to get the folks actually working with clients every day to be both knowledgeable, to be bought in, to feel that their own incentives, their compensation, what have you, is moving in this direction. So, what are the ways in which advisory firms, can make this real, I guess, in their business? And maybe anybody can take that as you
Liz,
like.
you're on a
If
roll.
you
If you
want.
wanted to start, and we can supplement.
Oh, I was going to say I've been talking too much. You guys should go. Why don't you kick it off, Randy, and I'll fill in anything
Sure.
that I see that you guys don't cover.
So I guess investor education is the broad topic. I mean, sorry,
Yeah.
advisor education. Yeah.
Yeah, advisor education is certainly important. I think the one thing, though, I just want to um, do a little level setting as well, that there is nuance. There's not perfection, particularly in public equities and fixed income. You're going to find something wrong with every company that is in a particular index. And so, what you need to be educated in is how to determine if you're investing in funds or ETFs or even direct investments, which companies score best for whatever impact themes that you're interested in. And there are third parties that do a good job of looking at individual companies and also mutual funds and ETFs as well. So, and then supplementing that with shareholder engagement, which many ETFs and mutual funds will do as well. So they are voting proxies in a certain way. They are partnering with like-minded investors to engage with companies to be better corporate citizens, to do things like have, whether it's DEI audits or just disclosure of greenhouse gas emissions or other ESG themes. Those are things that are important for investors so that they have some sense of being able to measure what sort of impact they're having. Uh,
Just to
yeah,
underline that, Randy, you're saying that you could be in an index fund that has essentially the same holdings, but the differentiation is going to be that that manager is more engaged and is more getting in the face of the companies on some of these issues.
absolutely,
Yeah,
absolutely.
yeah, yeah.
So yeah, that's important. In private assets, one can be a bit more targeted. If you wanted a fund that just invested in women's education in sub-Saharan Africa, probably find something like that, or something that just invests in specific themes. There is a manager on the line I saw that is trying to address the digital divide. And so there are very specific types of investments you can do on the private side. Of course, in the typical asset allocation, you're going to be the highest weight is going to be in public equities. And
Yeah.
so how do then we get some measure of impact and systems change with those while also maintaining, because again, we're still doing a lot of the traditional type of work of not just values mapping, but looking at asset allocation, looking at goals planning, and all of those traditional things that an advisor or consultant might do so that you are aligned both from a financial and from an impact perspective. So that is one way, and I think that advisors can address their clients' want for a more purpose-driven portfolio while not just having a two-stock portfolio and just windmills or something like that, so that you can have a broad base and also achieve the performance, market rate performance.
Great,
In the
great.
main.
And just on this notion of advisor education, I know Impact PHL, Cory has been working with US SIF on a course that seems on point. Do you want to say a little more about that?
Yeah, I think it tracks back to, I always often tell people that this goes to one of the questions that was raised in the Q&A as well, around how advisors can find more high impact opportunities or local place-based opportunities. And I often tell people that local isn't scalable in a way that puts it on the platform. So often it's literally invisible, not only to their clients, but often to the advisors themselves. David, you mentioned earlier that sometimes there's a perception that there's not enough deal flow. We've identified more than $1 billion of impact driving investment opportunities here in the Philadelphia region. And I see it as part of our mission, is I call it the metal detection, to find these opportunities through our network and then make them visible to our growing network of people who have expressed interest, people and organizations that have expressed interest in local impact investment opportunities. I think CapShift is a good platform to help with some of that. But for everybody, no matter where they are, I think part of it is getting out in your community, talking, sharing information to unearth and make these things visible. I still think there's a due diligence conundrum, and that gets back to your question, David. And I'll drop a link in the chat on this course that one of our board members worked with US SIF to design, specifically targeted at financial advisors to help them learn how to do due diligence on these opportunities, even if they're not on platform and even if they haven't been due diligence by in-house staff or CapShift or what have you.
And specifically regional, specifically place-based, like you're saying? Is that
Right.
if I take the linked regional impact investing program? So as you said, there's obviously the broad thematic sectors, but then there's your own local communities, which may not get captured by national platforms and things. So there was a question also about how to find advisors who are champions of impact investing. There's this service, I think folks are on the line, valuesadvisor.org. Let me drop that link here. Any other thoughts on how to find advisors if you want to switch advisors?
I may just throw out there that it's really important that people ask. There's a bit of a chicken and an egg problem. We hear from a number of advisors that, oh, nobody ever asks about impact, or this isn't something that we have demand for. We also hear clients who have fired their advisor because they didn't offer them impact, but they never had the conversation. And so I would just flag this as an area in particular where I think there's nervousness, both at the client level, right? The client hires an advisor to be the expert, and they don't want to be seen as foolish for asking about impact investing, for asking about values alignment. And the advisor likes to be an expert. And so they stay focused on what they know and understand. I think this is a real opportunity for people to grow together. And so if you are in the person kind of looking for an advisor, don't hesitate to ask, and ask really clearly and explicitly, because even if that advisor ends up not being the right person for you, you're kind of helping build the muscle for the industry, right? That there's demand out there. And all of the surveys and studies that we see say there is, tremendous pent up demand in the philanthropic space, in the advisory sector, at the ultra high net worth level, and that people are not having these conversations as aggressively as we might hope in order to see that kind of education funnel speed up.
One of the things that comes up, and it's coming up in the chat here and in the Q&A, is obviously the returns question. And sometimes the advisor may not raise an opportunity because they think it doesn't meet the client's returns. Sometimes the clients, are concerned about returns. Sometimes the clients are willing to do things that are, in a different risk return profile. One of the questions, a couple of questions, both Victoria Stein and also Juliet. There's a question here about CDFIs as in particular, as very community-based kind of lending institutions, lots of opportunities to support local as well as small businesses and specifically low-income communities. Are CDFIs a kind of under-tapped product category?
Absolutely, I can address that. We do a fair amount of work with CDFIs. Actually,
I guess in my quest to unpack these acronyms, community development financial
institutions, yes, and then there's credit unions as well. And they are, as you say, mission-based financial institutions who provide access to credit, usually for the unbanked. And are in the community, particularly the credit unions, the money stays in the community a lot longer
So is this
and
a is
find
this
at the
a is
money
this
center
just a
banks.
place to put your cash? Is this just like a deposit, or is this an actual investment in a loan fund or what have you in the equity of the CDFI
It
for
can
that
be
matter?
all of the above.
Yeah.
And what we're experiencing is, at a minimum, CDFIs for just the average investor, it's the easiest point of entry into the impact space, just setting up an account there. And they do provide all the FDIC insurance that one might want. There even are programs where one can deposit in with one intermediary that will then farm it out to a variety of different CDFIs. And so that you have that protection, that FDIC or the equivalent for credit unions in excess of the $250,000. But what we are experiencing is that a lot of foundations are trying to either park cash there or investing in community investment notes that are then turning around and either lending to small businesses, providing, again, access to credit, investing in to address food deserts, again, small businesses, home ownership, all of those things that can actually revitalize communities. And so CDFIs are right there on the front line.
There's a similar question about social bonds. I'd love to just expand that also to just muni bonds. And we've done a lot of work on how muni bonds can be steered towards I mean they're sort of the original
Yeah.
impact investing and impact investments in some cases,
Yeah.
but
Well,
you have to be
by
able to.
definition, muni bonds are impactful, but I think what we're seeing investors who are interested in true impact is, I mean, Greenwich, Connecticut needs to rebuild schools and roads and bridges as well, and so rich communities uh, also will have muni bonds, but there are muni bond funds that are impactful that are focusing on underserved communities, under-resourced communities, so that you can get capital to them. I'm sorry, I'm now dominating
Yeah,
the
no, I
All
would
right.
love to
conversation.
add
I'm
on
going
to
to
that
pass it on.
actually, just to
Please.
add additional color. So I think that to your point, Randy, of course, you see munis across geographies. I think when we look at muni bond managers, we're looking for managers that are being really intentional and setting thresholds across what constitutes an impactful municipal issuance. How are they thinking about certain thresholds that they're achieving in terms of if they're investing in education, what percentage of children are they impacting that are living below, the poverty level? What percentage of hospitals are they working towards deploying capital towards that are in underserved areas where there aren't hospitals for miles and miles in the surrounding radius? So what's intriguing about munis is also, I remember, they don't sound that sexy on the outside, but you actually can take a very place-based approach, and certain municipal products will actually also allow you to tailor or tilt your portfolio towards a certain state that you're from. So that's intriguing. I think coupled with CDFIs, I also just want to make a plug that CDFIs, which are fixed income notes, they are also able to be geographically targeted, and that can be very powerful. So just worked with CapShift and Liz actually to allocate capital towards a national CDFI, but we could geographically target New York, looking at affordable housing for LGBTQ plus and unhoused populations, which was the client's goal. So I think that there are very meaningful place-based opportunities. Yes, in the catalytic capital space, which I think CapShift certainly operates in, as well as market rate opportunities like muni bonds as well. So I think you can get quite creative across asset classes.
Great. Just to stick with this theme of sort of the business of being an advisor, Francois Richaud, I don't know if I have that right, asked about partnerships. So in cases where an advisor is working with somebody else, I think there's, the underlying question here is, you've got to share fees in some way, which folks maybe don't always like to do. So how do partnerships work? Julia, this was
Yeah.
targeted to Julia and Liz, because I think you guys have a partnership.
I mean, Liz, I'm happy to kick off, then I'm going to hand it over to you because I'm sure you see a bunch of different arrangements. So a few things that we thought through with CapShift is Yes, we're essentially enabling off-platform investments to be made through CapShift. Glenmede charges a nominal fee on those assets. So whether it's $50,000 or $250,000, we'll charge a nominal fee, which is essentially our reporting and kind of facilitating that connection to CapShift. But we make sure it's very fair. One could say, oh, isn't that cannibalizing assets that could be going into on-platform opportunities? But the way we see it is it's such a differentiator for clients, whether individuals, foundations, to have access to place-based investing or just more niche thematic early stage ventures like a women's health VC fund. So honestly, the biggest, to answer Francois' question, I think the biggest hurdles for us were kind of normalizing this in the more stodgy world of wealth management with our operations and compliance teams and saying, look, we need to be creative here. How can we be innovative here? And it's almost like once you get through like 1, 2, 3 cycles of actually bringing on those CapShift investments, you establish a process and you have that process map and it makes everyone feel a lot better. But for us, it's absolutely a differentiator. And Liz, I'm sure you see such a different flavor of partnerships. Would love your thoughts.
No, but I mean, the way we work with Glenmede is very similar to how we work with many of our clients. And fees are kind of a big component of this, David, right? Nobody wants to feel like they're overpaying or being double charged. And so we try to set this up so that advisors have access to information, the ability to build this kind of buy list concept and bring some product onto their platform to be able to say yes to many clients at a very reasonable kind of flat rate. And then we think about for those clients who want truly customized impact portfolios that are much larger, there is more of a basis point fee connected to that. And we do that in conversation with the advisory firm, both understanding kind of what are they charging existing clients, what is appropriate for the level of the work that CapShift is doing. And we do see it as a differentiation, just like Julia's saying, this is not your standard kind of bread and butter that any firm is kind of out there doing across a full value of a single account in most instances. And so there is a premium connected to it, but that premium has a cap to it, right? And it does depend on the level of customization we're talking about. And for the most part, we've found that to be, I think, both very fair and in line with what clients expect. We've also found that most clients who are looking for truly customized impact investments understand there's additional work and effort put into that, and value the impact reporting, the monitoring, the customized due diligence, and things like that.
Great, great. There's a sort of set of questions around impact monitoring. I think the phrase came up earlier, greenwashing or impact washing, and so just sort of the converse of the risk return, on the financial side, expectations. But people have impact expectations too. They want to make sure that if they're doing this, that they're actually getting the impact. So how does an advisor actually talk about that? They're not necessarily that close to the actual work, so they're trying to make some representation that there's impact here. How do you know?
So
Anybody
one of
want to
the
take a stab at
things
that? Yeah.
CapShift sees as really important is doing some level of impact diligence. And that's a question of, one, what is the fund or the investment setting out to do? What's the theory of change involved in it? What is their ability to measure that and bring it back to you and say, yes or no, we've accomplished this and at this level? And then what is the likelihood that it can be accomplished? And so those are questions that we ask as part of every diligence process. And we treat impact as the same kind of order of magnitude as our financial and operational diligence. Now, not every firm is going to have the capabilities to do that, but I think making sure you at least ask those questions if there is intent to have impact there, and that you can document it. And then many of these firms are creating annual impact reports that can go back to you as a firm and the client. There are also service providers like CapShift, like Blue Hub, who will do some of the validation around that for you and turn it into a better way to have conversations with clients. And we do see kind of time and time again that that's a differentiator in client conversations, to be able to say, not just here's your financial return, but here's your impact return. And I've heard from advisors that being able to talk about that impact return, particularly in kind of down market cycles, is a really nice way to have kind of a positive conversation with a client. And that can even be true, and we've seen this happen when impact is off track, right? COVID was a great example of impact being off track for a lot of organizations because they weren't able to do business business as usual and operate the way they would have intended to. And so when we gave impact reports that year, a lot of what we were saying is organizations are not hitting their milestones, but here's what they're doing. But that also means when things are delayed, when money is taking longer to come back, everybody's expectations have been managed to the same rationale. And you have the full picture. It's not just the financial performance, it's also the impact performance and kind of how organizations and funds are making those trade-off decisions.
I wonder whether, there's been, as we said, a fair amount of pushback, and some of it comes from supporters. So our friend Robert Rubenstein at TLBI, TBLI, sorry, Triple Bottom Line Investment, had a column that got a sort of bunch of traction, I think, on LinkedIn. And it's basically called Impact Investing, how elites invented something to feel good while doing nothing, and made the case that this is kind of an elite affectation to be able to just talk about it at cocktail parties, but that it's not really changing conditions on the ground. I'm not sure that it was completely fair, but it was sort of provocative. And I wonder whether clients are coming at you as advisors with those kinds of concerns. Like, I don't want to just do this for window dressing. Maybe this is all just a bunch of talk. Is there something really here? How do you answer that if clients are kind of skeptical at that from the other side?
Yeah, we're seeing a lot of those sort of conversations. And in the foundation community, I guess these conversations have been going around for a while, but now they're talking about, should we sunset? Should we spend out so that we can have maximum impact? Or do we exist just to exist? And we spend our 5% and feel good about that. And then invest the remaining in any possible way that we want to, sometimes and often counter to our mission. So there is a, pardon the phrase, come to Jesus moment that I think a lot of investors are having. But just to build on some what Liz was talking about, there is a tool, I think I saw it in the chat, Your Stake, which looks at public equities and can identify there's a variety of different impact themes that one can select from. It can show how your portfolio is doing relative to a benchmark that you select, and can even identify what names in your portfolio are causing either you to outperform that index from a impact perspective or underperform. So the tools are getting better. There's still a long way to go. And this is a developing
I think
science.
Cory mentioned Invest Your Values.
Yes,
Comes from an outfit actually here in Berkeley called As You Sow.
yes, as you
Um,
saw, Andy Behar. Yeah, they're
yeah,
doing
and you find that, for example, many fossil fuel free funds have a lot of fossil fuels, and many gender lens funds are not all that great on gender issues, and
yeah.
it's quite an interesting exploration.
This goes back to education. What does fossil fuel free mean? Do you have banks? Do you have insurance companies that provide property casualty insurance to fossil fuel companies? Maybe a best in class approach is best because there are a number of fossil fuel companies that are seeing the light and are investing in renewables. In fact, some of the heaviest investment in renewables is coming from those fossil fuel companies. So those are things, there's a lot of nuance, a lot of things that need to be described to investors, but we do need to continue to show uh, not only the financial performance, we all agree on what that should look like, but what sort of impact performance that one is achieving, or if they aren't, what can they do to either engage companies to be better, to do better, or are there alternative names that you could have in your portfolio? Again, just talking about from public equities and fixed income to increase those scores without dropping performance. I do want to make one more point, and I'll pass it on, is that there's a spectrum of returns that one might expect. Most of the portfolios that we manage, and I suspect Glenmede is the same, that is targeted towards getting um, market rate returns. And we do believe that looking at some of these non-financial factors like greenhouse gas emissions, like policies toward labor practices and parental leave and things like that make for better companies and better financial outcomes long term. There's plenty of research, 20 years of studies on that. And the consensus is that, yes, if you look at ESG factors, you can get better financial performance. So that is something that we need to continue to reinforce. But we do have investors across the spectrum in terms of their political beliefs. There are conservative, faith-based investors that might not want certain things in their portfolio, whether it's abortion or some Muslim or Jewish investors might not want pork products in their pornography, things like that. And that may result in either outperformance, underperformance in certain periods of time. They need to be explained to those clients. And then again, just the nuance involved in picking a portfolio that is designed to outperform for the long term. And then you might have within that a small carve out for those place-based impact first investments that may just get a return on capital. They might be very experimental exploration type of investments where you don't expect any returns. Maybe your donor advised funds are the best things to use those for those types of investments. But just making sure that clients understand what the return expectations are for
Great.
the total portfolio for anything impact related.
Great. I want to give folks a chance to, we're right at the hour. We're going to go run a few minutes over, but if folks can just have a sort of final thought and I guess frame it if you have an example or a story of a client who on some kind of journey. Cory, you made a good point earlier about not being about convincing people to do something they don't want to do. It's really about enabling them to do something they do want to do. And maybe just expound on that and in the Philadelphia context as you've seen in your network, and then others maybe Julia and Liz, if you have a client story, and wrap it up in some kind of bow, and we'll send folks off.
Yeah, to your point, David, I feel like I have the opportunity to come, and talk to people and start with what issues do you care about? What problems in the world do you want to fix? I think everyone cares about something. And I think that the way we've built the financial structure, sometimes we're not giving people what they really want. And sometimes they volunteer crazy things like, I have enough. J. Cohen Gilbert, the founder of B Lab, when he first got his first tranche of exit money from And1, he told his financial advisor, we have enough. Your job is not to maximize return, it's to maximize impact. And his financial advisor said, I'm not even sure what you're asking me to do. Right now, that was a long time ago, but I think there's a lot of people that are frustrated. I have a story here in Philly of talking to an organization that was frustrated by their financial advisor and getting ready to consider leaving. Well, fortunately, I knew the sustainability office there, and I was able to backdoor some information, not surreptitiously, but to let them know, hey, you need to go talk to your client-facing person and make sure you're in the room so you can secure this client. And fast forward, and the client's happy and the client was retained. But I think there's a lot of people out there who are hungry to move the needle on the issues they care about, and they have a tool at their disposal that we're not fully enabling for them. So I would just encourage that conversation from both ends. It's great when the client can initiate it and give the financial advisor the permission to talk to them about these products and these offerings. But I also think the financial advisors need to tap into this resource that ImpactAlpha and CapShift is providing to get more confident on how to enter those conversations and initiate those conversations.
Great. Julia, any thought on sort of the client journey?
Yeah, absolutely. I think the most impactful way to just paint this picture would be through a brief case study. So I work with a $90 million foundation. They're based in Ohio, very focused on racial equity. And when they started, they had 0% alignment to racial equity investing or mission aligned investing broadly. They're now approaching 60% exposure to racial equity investing and 70% exposure to mission aligned more broadly. But it's been a journey. I think there was actually a lot of distrust initially because they'd been a legacy client with Glenmede. And they hadn't really had meaningful conversations because my team hadn't been brought in. That was in part because we didn't know how strong their interest was in the space. But of course, one conversation happens and it expands. So seeing their journey, I think what's really worked for us is continuing education on both sides, listening, hearing what they view as viable. So, for example, they're interested in climate justice, David. They're taking more of an intersectional approach to racial justice. And then they're keeping some opportunistic views, saying, you know what, we want to see what racial equity investing opportunities look like in a year from now, 2 years from now. And that's why we're not gunning it towards 100% alignment, because we want to keep some dry powder, if you will. They're using shareholder engagement really effectively. And then they're also reinitiating conversations with us about CapShift because they want to make meaningful change in Ohio in the specific region they're in. So I would say my final pieces would be just demand education. If you're not getting access to the resources you want, then ask to be connected to someone who can provide those resources. This chat thread has so much richness in it. Make sure to follow up with ImpactAlpha for any resources you've heard and want to dig into.
Terrific. And Liz, you want to just take us home, and we'll send people off to do the work?
Sure. Maybe the thing that I've watched happen time and time again is one of the best things people can do is get started with something imperfect. And that may mean, hey, what's accessible on your platform isn't the bullseye that the clients asked for, but adding something to their portfolio that gives you a place to have a conversation both helps you learn more about what the client is looking for, but it also helps you offer meaningful feedback to your firm about what's not working with what's already there. And I think frequently in these conversations, we can get tied up on the like, well, the fossil fuel product isn't perfect, and so we're not going to use it at all. Or I can only access this national CDFI fund and not the local one. So we're not going to move forward with anything impact first. And time again, when I watch that kind of first step in a portfolio, I watch engagement from clients go up. I watch advisors understand a little bit more about the texture of what the client was looking for. And you start to see meaningful dialogue happen kind of at all three levels. And I think as a community, that's what we're all looking for, is how do we do this a little bit better? And I'll say CapShift and many of the products that we work with take that input as well and say, what else do we need to change and see and bring back in kind of product fit for our clients? And so any of that kind of action and moving dollars starts to indicate demand in other ways and gives you kind of a place to offer feedback to the sector. So I would just encourage everybody to be comfortable taking small, imperfect steps versus waiting to get it just right.
Terrific, terrific. Well, I think folks have seen the kind of complexity of the advisor role and sort of being able to sort through everything on the client side and as we've talked about, everything on the product side, everything from the impact management and measurement side. There is a skill set there that is sorely needed, and we will do our best to try to bring forth kind of resources. I would say this call is part of a broader effort to kind of just open up the conversation and be able to make things available more broadly, so advisors who want to get going kind of at least have a place to start, as you said, Liz. We will round up both the conversation, but also the terrific resources that have been surfaced in the chat line in the post tomorrow, I guess. And we'll have a replay of this. You can point it out to your friends and colleagues. And keep watching Advisors Corner on ImpactAlpha. All the folks on this call, I'm sure, would love to hear from you as well. And we'll see you next time. Thank you to our panelists, and thanks to everybody who joined.
Thank you.
Thanks
Thank
for
you.
having me.
Thank you.